Hey everybody, this is Mike, and I wanted to share with you today a trading strategy, if I can say that correctly, that might be really helpful for you that I'm testing out right now. So this is not my own invention. This actually came from a great YouTube channel called Vertical Spread Options Trading, and in his video, he talks about using the SPY to do put credit spreads. So what I loved about the system that it has a 90% win rate, but the one thing that I felt could be improved upon is that it's contingent on you using spreads with expiration 30 days out. So I thought, the thing that makes a trading system really worth it is that you can do a lot of trades. So I thought, since the SPY has expirations 3 times a week, Monday, Wednesday, and Friday, is there a way to take his strategy and apply it to a 7-day expiration instead of a 30-day expiration? So let me go over the parameters of the system and show you what I've learned so far. So this is how the system works. When the SPY is above the 50-day moving average, you're going to want to open a put spread at cred at delta 30 and sell either at the delta 26 or the delta 25, depending on your risk tolerance. So if you go 30 delta, you sell the 30 delta, and then you buy. Sorry, that's a mistake there. So open spread that you sell at the 30 delta, and then you buy at either the 26 or 25. If you buy at the 26, you're collecting less money, but you put up less collateral. If you open at the delta 25, you collect more money, but you take on more risk collateral. So what does delta 30 mean? Delta 30 means that there's a 30% chance of the SPY falling to that strike price. So that also means there's a 70% chance of success. So there's a 70% chance that you'll win. However, there is a way to improve on that 70% chance of success to bring it up to 90%. And the way you do that, that's actually wrong. That's more like 3% out of the money, but still, it still has a 90% win rate. And you can find the delta numbers at CBOE options trend. You could just do a Google search on that, find the CBOE options trend, and find the delta numbers on their charts once you enter a search for the SPY. The way you kind of improve this win rate from 70% to 90% is you're going to only open this trade when the SPY is above the 50-day moving average. That means you're not dealing with bear markets. You're not dealing with times that the SPY is really struggling. And also, you're going to close at 50%. So typically, if you open this credit spread at delta 30 and delta 26, so you sell the delta 30 and you buy the delta 26, you're going to collect about 40 cents or $40, and you're going to put up $200 collateral. So what you want to do is you want to close when you have a 50%, when you get 50% of the $40. So you're going to close when you get about a $20 profit. So you don't get the other $20, but what happens is you increase your win rate from about 70% to 90%. So what does that mean as far as how much you win and how much you lose? Well, what you will do is for every win, you're going to get about $20, and for every loss, you're going to lose about $80. And even though $80 is 4 times more than the $20 win, you're winning 90% of the time, so you end up profitable. So why collect 40 cents? It's because you're going to be trading a lot, and you only want to risk mostly like 1 to 2% of your portfolio. So for example, if you have a $20,000 portfolio, you're only risking $200 per trade. That's 1% on a $20,000 portfolio, 2% on a $10,000 portfolio. So that makes it real easy. And I talked here about the typical win will be about $20 when you close at 50%, and the typical loss, if let's say the S&P is having a really bad week, you'll probably close at before it expires, like on expiration day, but before the end of expiration day, and take a loss of about $80. But the great thing about this system is that it really prevents you from taking huge losses. So let's keep going. So like I said, it's a win rate about 90%, and you can confirm, because I'm going to leave the link to that, the website, the YouTube channel for, if I can find it here, Vertical Spread Options Trading. I will leave his link there. And so you can look at the system he did for himself for the 30-day. And that will allow you to kind of see the system that was back tested for 10 years. And he also back tested the system during the 2007 to 2009 bear market. And here's another reason why I'm liking this. You could open it Monday, Wednesday, and Friday, and then close the following week. So it's basically open for 7 days because the SPY has 3 expirations per week. So theoretically, you could get over 150 trades in a year. Now, the S&P 500 will not, the SPY will not always be above the 50-day moving average, but I would say probably it seems to be typically about 70% of the time the S&P 500 is above the 50-day moving average. So that's going to give you probably like over 100 trades a year just on the SPY. And here's why I really like this system so far, because I've been testing it, at least paper trading it, and so far it's 2-0, and this includes this really bad week that we had where the S&P had a 7% correction. So you may say, well, if you're opening the spread 3% out of the money, how did it survive the 7% correction? Well, what typically happens is when the stock market falls really hard, falls like 3, 4, 5%, you tend to have a rally the next day where it kind of recovers like half of that loss. So what happened was during one of the trades, when the market fell 5%, you did get this big loss, this big, that the spread was broken. But then the S&P 500 literally recovered the next day and was able to hit that 50% profit mark. So it survived that correction. It doesn't mean it's going to survive all the time since, it's going to fail 10% of the time. But, the system works because of these main 2 reasons set. You're only opening the spread when it's above the 50-day moving average, the SPY, and you're closing at 50% profit. So you're not leaving it open until expiration, which can expose you to big losses. So one thing I'm going to do now is, in addition to the SPY, I'm going to try this on the GLD and the TLT. So you're able to put more money at risk with less correlation, because the SPY is not always correlated with gold and long-term bonds, the TLT. And also, I'm just going to try it on a good stock. Like I think a good stock that's almost always above the 50-day moving average, like an Amazon, just to see how that works. And what I'm going to do is just every week, I'm just going to update you on how the system has been working or not working, whatever. But I think it's going to work, and I think this is something that could be just a nice trading system that lets you sleep at night because it has a high win rate and you only open it when it's likely to win. So I hope you enjoyed this. If you did, I'm coming out with videos before every trading day. So please be sure to subscribe and turn on notifications, okay? Thanks. Bye.